Hello everyone and welcome to Day Trader S&P 500. Today is Thursday, March 16th, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. We're going to look at the Qs. Got to get into the 10-year S&P and ES. Let's start with the Qs. We're looking at a daily chart. You can see some of our actuals and targets within 1 point or no points of 100% accuracy. But anyway, the key here is the B wave high on August 16th at 334. Okay, A wave down was 5 waves, B wave up. We're expecting 5 waves down for wave C. You can see in italics the small numbers there: 1 down, 2 up, 3 down, 4 up, 5 down for the larger wave 1. See if we can get that a little bit better. October 13th, and we got an A up, a B down, and a C up, which was on February 2nd, I believe. Yeah, that's the wave 2 high. Getting close to 100% there. Let's look at it. What do we have here? Usually, we've been having some unbelievable 786 and 900 retracements that have held, which is highly unusual. This is sitting between the 618 and the 786. It's about 1:30 in the afternoon Eastern time. If this is broken, it's not that big a deal. If this 334 on August 16th is broken, that's a bigger deal. Okay, if this is broken, it just means that 2 is higher. And as I've said, we've seen some 786 retracements and 900s that you'll see in the ES that have held unbelievably, and great setups there. Okay, but anyway, that's where the Qs are. Let's remove that. We've got a 1 down of 3, a 2 up is in process as we speak, and we'll get a 3 down, a 4 up, and a 5 down for the larger wave 3. There's 1 down, there's 2 up. Let's go take a look at the US 10-year here. Okay, let me get that into focus. Okay, here we go. Let me get more to that high. Okay, there, that's good. Right there. Okay, so we had that high of 4.335% back in October. And we've got an A down and a B up so far. Okay, or that's wave 2 down. That's the larger wave 1. I have it up there. Okay, and that's from the March 2020 low to that October of 2022 high. So it was a large wave 1. This is a large wave 2. And then we've got to move up. Okay, this is critical right here to 3.321. Okay, if that is broken to the downside, then we're likely correcting more, and the 382 retracement of that huge 5-wave rise into the 4335 high. The 382 is at 2.81% right there. And if we call this an A down and this a B up in the blue, then C equals A at 3.073. So a break below 3.321 brings these lower targets into play. The 3.073 where C equals A, or the 2.810 which is a 382 retracement. And I believe that is right there. Okay, so that's what we're looking at there. That appears to be a 5-wave rise to begin the 3rd wave up. But again, 2nd wave down cannot retrace more than 100%. So we're near that, and it's moving around, as you can tell lately. Okay, so that's the US 10-year. That's what we're looking at, the critical support at 3.321. If that breaks, then we're looking at those 2 lows. Okay, let's look at the S&P. This is the cash S&P. This is a weekly chart from the all-time high of January of 2022 all the way to the current time. Weekly chart. This is amazing how this is breaking down in not just perfect Elliott waves and Fibonacci multiples and retracements, but Fibonacci time. As you can see, the larger wave A was close to 23 weeks. We had 1 off on the B wave up and 3 off on the wave 2 up, the wave 1 down. This is 3 different degrees of trend. At all degrees of trend, this is moving in respect to Fibonacci time. Okay, so the next time turn date, Fibonacci turn date we have in our sequence in the weekly is the week of April 10th. Okay, so if this move down completes the larger wave C in that time frame, which is less than a month away now, there's where C equals A at 31.42. You can see it there. So if this thing keeps in perfect Fibonacci harmony in terms of wave structure and price and time, it'll all meet there. We'll see what happens. We'll take wave structure first, wave price second, and wave time third. And when, like I say, when they all marry, it's a beautiful thing. So we'll see how that plays out. But again, here's that wave 2 high on February 2nd. That if that is broken, it just means that 2 is higher. But the make or break is really, again, the August 16th high, 43.25 in the S&P cash. So we'll continue to watch that unfold. I think, do we want to look at that at a smaller time frame? That's too much of a mess. Here we go. Let's go back here. Here's that 2-2 high over here on a weekly. Then we'll get on an hourly. There's that 2-2 high. See, we've got a 1 down in parentheses, a 2 up. Wave 3 extended, of course, in 5 waves. It was a 2.618 multiple right here. Then we had a 4 up, held below the wave 1 low. And then we have 5 down into the 313 low at 38.08. It's already reached the 382 retracement today. There are targets there. It's a little bit off center, but you can see them right there. Let me fix that for you guys, okay? Let's get in here and bring the 618 down a little bit. There we go. And let's bring that 382 down. There we go. And we'll move it up. That's a little more like it there. You can see our retracement targets there. Anything above the 41.95 high means the count is wrong. And any move below 38.08 means the retracement, the upward retracement is complete. We'll watch that as we always do on the shorter time frame, 10 minute, 1 minute, and update our monthly newsletter subscribers. Okay, let's go to the ES. I think we want to look at, look at the daily here again. January 4th all-time high. Wave A in parentheses down. Wave B in parentheses up. 1 of C, 2 of C. Again, repeat, same thing. The 2-2 high is 42.08. Excuse me. The bigger area of resistance is the 43.2750 high on August 16th. Okay. We have our alternate count in blue, as you can see here. A move below that 37.88 wave B low will eliminate the alternate count. A move above 43.27 will bring this alternate count target of 44.66 into play for the B wave. Does it mean the bear market's over? No. It just means that A down was complete here. The alternate count means wave B is complete up here. Obviously, it's not a bear market if the 48.0825 high is taken out, but that's the math right there, okay? Again, 42.08 resistance not as important as 43.27. If it's taken out, then the alternate count in blue comes into play. If this low of 37.8850 is surpassed to the downside, then the alternate count goes away. There's our wave 3 target at 33.79.75, and wave C equals A at 31.59.75. I've said this going all the way back to June and August of last year. A normal correction in a bull market would be an A down of 5 waves, a B up in 3 waves, and a C down in 5 waves, okay? If it goes to 31.59.75, that'd be a normal down, up, down, 5-3-5 correction, okay? And it can go further than that. It can take on, that's a 1-to-1 relationship. There's if it starts hitting the 1.618 and the 2.618, then you know it's a true bear market that's going to last longer than this one or the last 2 or 3 that have been like a year and a half, less than 2 years. We had the one in 2000 to 2002, the one from 2007 to 2009, and now this one, which is a year and 3 months old. So if it just goes equality, it might go to this fall or this April with the turn date. But that's the bigger picture. We'll check that out. Let's go into the hourly. I think we're going to look at this from that wave 2 high on 2-2. See if we got that there. There we go. There's a lot going on here. I tried to put things in different colors to not confuse everyone, but let's go back a little bit first. I cannot reiterate this a month. All through here, we kept saying the declines are 3 waves followed by a higher high. Declines are 3 waves followed by a higher high. The declines are 3 waves, rinse, repeat. We were looking for 5 waves down and 3 waves up to a lower high. And after that high on February 2nd, that's what we got. 5 waves down, trend change, lower high. Okay, then we had these, what I talked about before, these ridiculous retracements. Usually, if the market goes up to a 786, it retraces 100%. But there's one 786 retrace that held, another one, there's a 986, 2 more 786s, there's a normal 618, and this is incredible. There's a 904 that held with a lower low, a 979 that held with a lower low, and a 993 that held with a lower low. Unbelievable setups here with a short stop right above where it's 100%. So unbelievable setups. Just, I don't know that I've ever seen that many, or that, like I said, almost all the time. You get a 786, you go above it, you're done. You get 100%. There's all of our direct hits on our targets. There's 1, 2, 3, 4, 5, I think 6 of them on the way down. We're hoping to hit a direct hit on one of these targets on the way up here. So we have a completed 5 waves. Look in parentheses. There's 1 in black in parentheses. There's 2 in black in parentheses. And there, that 2 came right underneath that 2 of a larger degree. And then 3 breaks down. 1 down, 2 up, 3 down, 4th wave triangle. There's 5 down at the March 2nd low. Wave 3, larger degree of trend. There's wave 4 up, held below the wave 1 low. And then we got 5 down to complete 5 waves from the February 2nd high to the March 13th low. So what we put out to our subscribers, I may show you that report today, is now we're looking at a retracement of this 5 wave decline that lasted a little over a month. Okay, there's our targets there. I think that's 39.80 in a quarter, which it hit. There's 40.24, and there's 40.67.50. And there's 41.29.50. Where is this wrong? If it goes above the February 2nd high at 42.08. Remember, the larger trend remains in play. If this 42.08 high is taken out, that becomes very key resistance. Okay, do we want to get into... yeah, we can. There you can see a little more detail here. Again, that here's from that low, that wave 5 low on 3/13th. We have an A up, a B down. This is a 10-minute chart. There's where C equals A. That's at 39.97 in a quarter. Looks like that hit right at 37.96 in a quarter. So we'll see if that's done or not. That's why I look at the 1 and 10-minute charts to look for a change in trend, and then we report that to our monthly subscribers. Okay, and there's that right there. So there's a confluence at 39.80 and 39.97. That's not as close as you'd like, but we'll see where this goes. Okay, as you know, we've seen some 786 retracements. I mean, look at this chart here alone. If this would go up to 41.29, it shouldn't surprise anyone, because of all these 786 and even 900 retracements that held, and then the market made lower lows after retracing as close to 100% as it can, in this case 0.9993%. Okay, I think that that'll do it. Let's leave you guys with the 10-minute there, and that's just 4 direct hits. Looks like we had, I think I counted 6 over there. So let's get a direct hit on one of these targets on the upside here and look for the next wave down. By the way, this move here is 1 of 3. I don't have that 1 in here. This is 2 of 3, and the next one will be 3rd of 3rd. So we're into it now. Okay, and I think that'll do it. Or no, I want to show you guys the reports, which is basically the same thing. This was yesterday morning's report, and there was our 5 waves down. There was our retracement targets there. Okay, we got that, and let's look at that's the and that was the morning report yesterday. I don't think I have today's, but I got the one on the cash. Okay, so this was sent out to annual subscribers, which is the S&P cash, and here's a picture of the cash 5 waves down from the 2.2 high to the March 13 low, and the retracement targets up. let's leave it there. You guys have a good one, and until next time, take care, everyone.